Hello, my fearless ones. I usually yell, so I figured I would say hello today. How is everyone doing? Welcome to all my new subscribers. I'm super excited. You guys, I want you to know I get excited every time someone subscribes to my channel because they let me know that I'm putting out content that people actually like. So keep subscribing, keep viewing. There's more great stuff to come. Don't forget to turn on your notifications. And yeah, let's just get started with the video. So, well, before I really get started, I want to say that information can change your life. The difference between where you are and where you want to be is what you don't know. So I'm going to try to put together as many great credit videos, financial videos, work from home as possible to just try to help my fearless ones, the ones that are subscribed to my channel. Because if I would have had access to this information, and I say it all the time, my life would have been different just 10 years ago. So I tapped into the right information and it's now changing my life, and I want to share it with you guys. So let's get started. The name of the video is credit ingredients. So there are 5 things on your credit that impact your credit, and I will give you the percentages and everything. So let's just get started. Payment history. Okay, so the title of the video is credit ingredients. Like, what does your credit consist of? And let's do a breakdown. So we're starting with 100%, right? So the most important thing on your credit score is payment history. 35% of your credit score is payment history. And I'm looking down, you guys, because I tried to take good notes to ensure that I give you the information, give it in the order that I feel like is important. So the most important thing on your credit report is your credit history. How you pay. How, are you paying on time? Now, payment history usually affects your credit score for the first 24 months. So let's just say you had a late payment on your, mortgage or your car note. It will only really impact your credit score for 24 months. So after 24 months, it'll stay there. I'm not saying it'll disappear, but it really won't affect your credit score per se. Okay? So the next one, amount of debt, 30%. Your DTI, that's debt to income. So how much debt do you have versus how much income that's showing on your credit? So like when you fill out your applications for credit cards or, lines of credit, anything, how much debt report on your credit report and how much income you input will affect if you get approved or how much you're approved for. Because the last thing the bank wants to do is overload you with too much credit and you're using too much of it. That's where the credit utilization come in at. So if you have $50,000 worth of available revolving credit and you're using more than 10% of that revolving credit, then they're going to really take a look at your debt to income ratio. Okay. So the next one is length of credit. So this is where you can really boost your credit score. Okay. So a lot of people say trade lines. I say authorized users. So let's just say grandma, auntie, anyone in your family, mother has been with American Express for 20, 30 years, right? Well, American Express is one of the easiest companies to add authorized users. So you just go into your account, add an authorized user. That length or that credit history will now show up on your authorized user account, their credit report. I done it with my son. So it instantly, you don't have to wait 2 or 3 months. It usually take 30 days or whenever, American Express report. So if you can find someone to become an authorized user, I know a lot of people use the word trade lines. I refer to trade lines in business. We're trying to build a good, stable credit report. So you want to be able to stay on someone that's family that you can stay on, not just for a month. So if you go and buy authorized users or trade lines, usually they only allow you to stay on their account for 60 to 90 days, and then you will be removed. Thus, that account will just show as closed on your credit history, and it really will not impact your score. So you're trying to find someone that you trust, that don't really use that particular account that often. Like, I usually try to keep my utilization for that American Express card down, because I know that it is affecting my son credit score. And I just don't want to, keep a balance, not too high because of interest, right? Okay, so number 4 would be new credit. So how much new credit is reporting to your credit report, your credit file? It does affect only 10%. And I don't know if I mentioned that credit history is 15% of your credit report. Amount of new credit is 10%. How much new credit are you applying for? How much new credit have you gotten? Let's take Chase, for instance. Chase has like a 524. They really don't want you to have 5 new accounts within the last 24 months. So right now, I wouldn't even apply for Chase, simply because I have too much new credit. But what's balancing it out is my credit history, because my oldest reporting account on my credit file is 22 years, you guys. My revolving credit, the oldest account, is about 15 years. So it's really important. Let's just go back real fast to number 3, which is our credit history. The longer you keep accounts and the payment history is strong, you haven't missed a payment, what's considered a late payment? Let's just say your bill is due on the 9th, but you forget. You're like me, you're kind of busy, you're going out of town, you're moving around, you forget. And you pay it on the 12th, right? That's still not considered late, because they have not reported it to the credit bureau. You usually have to be about 60 days late in order for your revolving credit to actually report a late payment. So you do have that wiggle room. Don't overuse it, but don't panic if you forget. Okay. And sometimes if you reach out, if you had this account for a very long time and you reach out to the company, they will waive the late fee and, ensure that it don't report. Just reach out to them. Again, it depends on the age of the account. I have a JCPenney's account. I had never been late and I forgot to pay it. And so I called in, I just talked to the rep and said, hey, I'm usually never late, but something came up, I forgot, and they waived that, whatever that fee was at the time. I think it was like $35 is the going for late. It could be more now. I have everything on auto pay, so I try to avoid those late fees. So now let's go back to new credit. It does have a 10% impact on your credit file, but new credit will also boost your credit because of the utilization. So the more available credit you have, it will help your credit file because it's going to lower your utilization. And this may be confusing to you guys. Rewatch this video over and over again if you have to. I'm really trying to help you understand credit because it can be confusing. That's why a lot of people do not have good credit scores, because it just seems really confusing. I feel like sometimes it's made to be confusing so we can't use it right, but I've learned, and so I'm going to teach. The next thing would be number 5 is credit mix. So this is where a lot of people scores vary. It's like, I have a 750. Why are they not approving me for this particular card? Or why did I only get approved for $1,000 or $2,000 when my credit score is really good? It's because you don't have a strong or thick enough credit file. Okay. So let's just break down what is considered a thick credit file. So you got your installment payments. Installment would be like mortgage, personal loans, what else? Just installment payments. What you received a loan and it's been stretched over X amount of years and you pay it off, right? So that's considered installment. Then are car notes. Car notes are installment as well, right? So then you have your revolving credit. Your revolving credit really affects your credit score the most because it's unsecured. You don't have any collateral connected to that line of credit. So it's really easier to go into a car lot and get a car versus getting a credit card for $20,000. You can go into a car lot and say, hey, I've been working in my job for a year. This is how much I make. The banks will probably finance that car because they know that if you don't pay that car note, they can just come and get it. That's, collateral, right? The car will lose value, but they can always resell it. But when it comes to revolving credit, it's unsecured. There is nothing to repo or come and get if you don't pay it. So that's the reason why it's harder to get a $30,000-$40,000 credit card because it's unsecured, right? But the more you have on your credit file, the thicker your file is, the more you can get funded. Funded meaning more banks will offer you revolving credit. If you don't have a mortgage, I will leave a link below this video. If you are a renter, don't be discouraged because now you can actually report your payments every month to a company. A company will report your rent payments for you as a line of credit on your account. So it will show and it will boost your credit score. This particular company reports to all. So if you don't use the company below, it's not an affiliate link. I'm just giving this information to you because, again, I wish I had it, right? So they report to all three bureaus, TransUnion, Equifax, and Experian. Some only report to Equifax and TransUnion. Well, we know that Equifax is really harder to boost that score. So if you can get your rent payment reported to Experian, it's harder to get your Experian score up higher than Equifax and TransUnion. But if you can get someone to report to all three, it will boost your score. Another thing, car notes. So let's just say that you had slow pays. I don't know what slow pays are. They don't report like that on your credit report. You either paid it, green check, or you didn't, red X. I never understood what a slow pay is, but if you were late on your car payment, right, and it was consistent, because a lot of people was affected the last year, their finances, they weren't able to pay things on time. And even though we were in a pandemic, these credit bureaus are still reporting that you did not pay. The best thing to do is, may I suggest, is to refi your car. So if you've been with your bank for years, you have a relationship with your bank, go to them, try to refi and lower that interest rate anyway, if you have a high interest rate. If you don't have a high interest rate, still refi it. It will knock out that account. It will report as closed. You'll open a new account and then it'll start reporting as good history again. So that's like a little trick. Mortgages, you can do the same thing. Most people don't want to refi their mortgage, but if you have equity, you could pull that equity out and do something else with it, like pay off credit card debt if you have any, maybe do repairs on your home. So it's a lot of things that you can do with your credit. We have been taught that credit cards are evil or using your credit is not good, and that's far from the truth, because you will run out of money before you run out of credit. If you can manage to get 100K or 80K or whatever in available credit, you can always use your credit to get by. You can always use your credit to build your business. Like, it's tons of things that you can do with your credit. So we're going to work on repairing your credit. Okay, so let's recap all 5 credit ingredients. Payment history, 35%. So let's make payments on time. And I apologize, you guys, I had to re-record this because my device got hot. So we're going to make the payments on time, That's 35%. The second one is the amount of debt you have, your debt to income ratio. And I use the example, if you make $50,000 a year and you have $100K worth of debt, not mortgage, because banks know mortgages are high, but you have car loans and personal loans and revolving credit, and you're using a lot of that revolving credit, that's that debt to income ratio. You will, even if your score is high, if you're approved for credit, it's going to be low limits because they're not going to take a risk of you overextending your pay, right? So keep your debt to income ratio down because it does take up 30% of your credit file. Number 3, the length of credit history. So again, I spoke about having someone that you trust that you can be added as an authorized user versus buying trade lines. People usually buy trade lines when they're trying to get a credit boost to purchase, make a big purchase, and they need their score to be high. But if we're talking about longevity, you're building a credit file that you want to last. You want to get with someone you can trust that has a long credit history with the credit card company and don't use that card very often, and if they do, they pay it off. Because if your grandmother has a Navy Fed or American Express, or it's a lot of companies that will allow you to do authorized users, and it's a 20K count card and she has had that card for 15-20 years, it's going to report on your credit file as 15 or 20 years. Now, it'll only affect 7 years of your credit history, but that's still a good thing. So 7 years worth of on-time payments with a revolving credit card of $20,000 will boost your credit score. Okay, so let's get to number 4, the amount of new credit that you have. I know you see my videos and you see that I have a lot of new credit. So I'm actually getting ready to go into the garden unless I find some really, really great credit offers. And I will speak on some companies that I think are good for you to apply for now, even if I don't have the card, but I do plan on applying for them in the future. I just want to watch my new credit so I won't drag down my credit score. So be on the lookout for those videos. And like Chase has a 5 to 24 rule. So if you have applied and gotten 5 new credit cards within the last 24 months, they will not approve you no matter what your credit score look like. They really frown upon too much new credit too fast, right? Then we have credit mix, 10%. So your overall credit file, how many installments you have, how many revolving credit cards you have, and like personal loans, everything is broke down into percentages. Your revolving credit is going to affect your credit score or impact your credit score more than installments because again, it's unsecured. So the more trade lines, the more revolving credit that you have reporting on your credit file, it will make it look good. It impacts it. So let's try to get at least 8 to 10 revolving accounts on your credit file to really thicken the file, especially if you're looking to purchase a home or purchase a new vehicle in the next 6 months. You need to actually boost your credit file. I hope this video was useful because I'm wrapping it up. My device is getting overheated, so I need to wrap this video up. And I hope this was helpful. Maybe you need to look at the video again to really understand how your credit works. But this is it. This is it. Hopefully this answer any questions you may have, especially with us going into the new year. A lot of people are going to be looking to, make purchases and do big things in their life. And I want to make sure that my fearless ones are financially ready to take on your 2023. It starts now. Start today. Go over and get your credit report. brand. I actually have a link below so you can get your credit monitored starting with $1 per month. Get with a great company. Sometimes Credit Karma do not give you the most accurate information when it comes to your credit file. So don't rely on Credit Karma to give you the correct information about your credit file, especially again if you're making new purchases here in the near future. You want to make sure you really are knowledgeable of your credit file. If you have not seen my previous videos, the first thing to do is remove inaccuracies off your credit file, which will boost it. So any wrong phone numbers, wrong addresses, misspelled names, let's get that information off of your credit file so it will not affect your score. And then there are some other things that need to be done to boost that credit score, and one is in the video. It would be number 3, right? Your credit history. So try to find somebody that you trust that you can be added onto their account to boost your credit score. So again, hopefully this really helps. Welcome to all my new subscribers. I am so excited. I was just saying, every time I get a new subscriber, I get excited because that let me know that, again, you guys like the information that I put out. More new information to come, more new videos. I will try to put out a video every Sunday and every Thursday. If I'm traveling, I will maybe do a live video to compensate for me not making a video, because I do move around, you guys. If you notice, I'm in my car now. So yeah, just click on your notifications. You'll get notified every Sunday and Thursday. I will try to have the post ready by 3 p.m. every day. I mean, on the days that I release. So see you guys later. Stay fearless. Have a great day. Bye.